quarterly estimates are based essentially upon corporate data, and even among corporates, it's based on the listed corporates. So these are companies which are listed on the stock exchange, so they use SEBI data. So you're talking about the largest of the large. So these are not the smaller companies at all. So the first round of revisions will happen when the Ministry of Company Affairs data comes in, which covers all corporates. And what if, as we all suspect, that smaller companies have actually done worse than the larger companies, then we should expect one round of revision on that count alone. The second will be when the informal sector data comes in. But that's going to take a while to happen. But there, I suspect the revisions may in fact be larger.
The thing is, normally you'll see both public spending and government consumption expenditure being directionally similar. So you could say that, if you had a 16% YOY growth in government consumption, maybe, the public spending would have been plus 10% or plus 8%. But normally you don't see a complete divergent trend of minus 10 and plus 16. So it's kind of baffling. And, even at best times, we know that this quarterly GDP numbers tend to be very volatile and subject to a lot of revisions. So I think what Dr. Pranab Sen said is that in future course of time, we might see revisions to these numbers, which may make more sense. But, if you think about the broader narrative, if it comes down to, minus 20% or minus 18, it doesn't change the story that we are still under a big shock. And as Rahul mentioned that, we don't know how long it will take for normalcy to come back, because what happens is when you do an unlock 3 or unlock 4, and as mobility increases, there are risks of COVID-19 cases to also increase. So we don't know whether it will be a stop and start kind of an economy, and in 2 months' time, when we have more mobility, after some time you may see again numbers moving up, which may lead to further lockdown. So this is something which is going to stay with us for a long time till we find a vaccine or a cure. So we would be very cautious about drawing conclusions, even if we were to take a positive view of this government consumption going forward. We would be cautious about the growth outlook overall. And the other thing which I can think of, I don't know whether that makes sense or not. April, June last year, government in a normal year were much more proactive in pushing kind of spending. This year, April, June, they themselves were kind of caught in this lockdown, and they could not push spending that much. But this still doesn't explain why there would be variance between the public spending and government consumption so much, and why such a variance between minus 10 and plus 16.
So we do think that private consumption recovers faster than private investments. Already there are signs that discretionary spending on, say, car sales and, some mobility numbers are showing improvement. But certainly negative growth is likely to stay with us for at least one more quarter, if not 2 more quarters. And investment growth is something, that has already been weak. We have to admit that this is, I think, the 6th or the 7th straight investment negative growth quarter that we have. So, the slowdown has been there for a while. And as Kaushik was saying, there has been a big hit on profitability, and not just from a top line revenue growth is likely to stay weak. So there's no incentive really to invest in a big way. And, the government push also on the investment front cannot be as strong as what happened in the Lehman crisis, simply because, there was significant amount of fiscal space at that point, and we were coming into this particular crisis with very little fiscal space on the balance sheet, right? So I think that this time round, the recovery cycle in private sector balance sheets and the activity levels is probably going to be far more slower and shallower than what we have seen in the past.